Thank you for joining us. I'm Katie Vila, Chief Operating Officer. I'm joined here today by Dave Buck, our Chief Investment Officer, and Michael Caldwell, our Managing Director. The three of us want to bring you into a conversation to give you some insight into how we're thinking about Boise, which is one of our highest conviction markets today. Maybe we can kick it off by just talking about the broader Boise landscape and how it's changed over the last 10, 15 years and sort of where it sits today.
Yeah, what's interesting is, we've been investing, developing in Boise for 15 years, as you noted, and it's changed a lot in that time. But it's also what hasn't changed is the fact that it is a super high growth market, and that's really been true for 35 plus years now. It's been one of the highest population growth markets in the country. If anything, what has changed is those trends have accelerated. So we've seen an increase in the gap between national population growth and population growth here in Boise. Today it sits about 4 times the national average versus 3 times the national average over kind of the preceding 35 years. That's driven by a variety of factors, but we're super excited about what we're seeing here on the ground.
Yeah, I feel like all the Wall Street Journal articles became, Boise was the boom town, and everyone thinks that that's what it was all about, but it's been going on way before.
Yeah, you saw this
COVID.
Pandemic, big boom in the pandemic. You saw a little bit of a pullback in population growth, still ahead of the national average, but for a couple year period there, and then it's really re-accelerated again to that kind of 4x the national average, as I noted.
Yeah, I think it's interesting. It's not only population growth either. If you look at GDP growth, you look at wage growth, all these growth rates have exceeded the national average, and the Rocky Mountain region, broadly speaking, has been number one, which is underappreciated by, I think, a lot of more nationally focused investors. What I also think is really interesting is what are the reasons for that? What's actually driving the population growth? Why are people moving here? Why are companies moving here? It'd be interesting to maybe discuss some of those factors.
People only move for 2 reasons. They move for a better quality of life, lower cost of living, or because their job moved them. But how does that actually play into what we're seeing?
Well, the three of us are living examples of that, right? You moved here from Los Angeles via Miami.
Yeah.
I moved here from Los Angeles, originally from Chicago. You moved here from New York. And why do we move? Well, job opportunity, in this case with Roundhouse, and for quality of life. I often tell the story that I lived on the west side of Los Angeles, worked in downtown LA. I would drive an hour in traffic, pass by a burning building on the way to work, have to go park in this parking garage and take the elevator up and walk across, And, to now, I'm probably one of the further located from our office here, but I have a 20-minute commute on a 2-lane road through the Boise foothills. I sometimes have to stop for elk on the way. When I reach Bogus Basin Road, I can turn left and I'm at, the local ski resort in 20 minutes. Or I can turn right and I'm in downtown Boise, which is alive and vibrant, and there's a public university. I can fly fish at lunch if I wanted to, although I haven't yet.
Yeah, I was going to say, Dave.
It's just a completely different experience. And I think that that's a lot of what, draws people here. And not only that, is that that quality of life is available for a 40, 50, 60% discount to what it costs to live in some of these coastal markets like Los Angeles, the Bay Area, Seattle, where a lot of people are moving from.
Yeah, I think what's interesting is the quality of life has always been here. It's always been a beautiful place to live. Commute times have always been low. It's always been relatively affordable. All of those things are still true, and those are still reasons why people are moving here and why we all moved here. I think what's really interesting now is we've seen this acceleration in job growth as well. So kind of the second of those 2 reasons you mentioned, we're seeing an explosion in a good way of companies hiring here, moving here, relocating here, being formed here. There's an emerging kind of tech startup scene. And it's not just one employer that's driving that. I mean, there are a few notable examples, most notably Micron Technology, which is a $1 trillion company now, building 2 chip fabs, $50 billion project. Just to put that in context, Idaho's GDP is $100 billion. So a tremendous project and a huge tailwind for Boise as a market. But there are lots of other growth drivers as well. Employment from You've got Albertsons, you've got Simplot, a lot of incumbent employers, you've got expansion at the airport, St. Luke's hospital system. So I think this next cycle, what we're really excited about is being driven by real job growth as well.
Yeah. Yeah. I mean, those are the three big ones, right? Like the Micron project, the St. Luke's project, and the airport project. And the airport project strikes me as particularly interesting, mostly because I feel like we saw it in Bozeman. Bozeman has incredible airlift for a city of that size. Obviously, Boise is a much larger city. But that airlift really meant that it helped accelerate the population growth of Bozeman, and it really brought capital to Bozeman in a meaningful way. And so there's a lot of structural differences between Boise and Bozeman, but that new concourse and that additional airlift, I think, is going to be really good for Boise and the overall economy.
Yeah, I think like if the first misconception that I think we often hear from investors or folks that are exploring investing in Boise is that this is just a pandemic boom market. It's just really the last 5 years. It's kind of retreating. And I think we've made the point that this has been going on for 30, 40 years, and this is just kind of the culmination. Sure, there was a spike in growth that kind of shifted up the whole growth curve in 2020, but it's still extremely strong demand, 4 to 5 times the national average, I think you mentioned. The second misconception is that, everybody that is working here, they're just working remote jobs. And it's very much not the case. Very diversified employment base here, a lot of legacy large employers. I mean, I think Boise is one of 6 cities in the entire world that has an over $1 trillion market cap company headquartered, which is pretty wild. But I think what's also missed is it's just the startup culture. It's a very entrepreneurial environment. And with a growing population, with a growing local economy, with people moving here, those people have demand for services, for schools and for retail and for everything else. And so it just creates this virtuous cycle, which is really healthy from a demand standpoint.
Yeah, and the Micron, the trend of the startup culture here really started with Micron, which was started in the 70s. And it's been, it's accelerated with everything that's happened in the recent years. But the wealth effect that's been created by the fact that Micron is a $1 trillion company now can't be overstated. I mean, I keep sharing with people, a couple of weeks ago, I was walking to grab lunch in downtown and saw this young couple, probably couldn't have been over 30, getting into a brand new Ferrari. And when I moved here 6 years ago, you never saw that in Boise, let alone 10, 15 years ago.
Was it a Roundhouse employee?
It was not a Roundhouse employee.
Certainly not.
I think also, like, we didn't really talk about Boise State University, but Boise State University received its university status in the mid 70s and is now has 28,000 students enrolled. It's been one of the fastest growing public universities in the country. And increasingly, the graduates from Boise State University are staying in Boise. There's a lot of out of state, particularly from California, but from all over the US. And they're coming here, they're experiencing Boise and everything that Idaho and the Mountain West has to offer, and they're choosing to stay because there are those job opportunities.
Yeah, and they just appointed a new president whose background is in technology and I think he has like 11 patents personally. So they're really leaning into that kind of technology and sort of tech industrial or tech manufacturing presence that's here in Boise and the ecosystem that already exists.
Yeah. It would be interesting to talk a little bit about, that was sort of Boise at a high level, but let's talk about multifamily in Boise. I know that Casey always quotes that when him and Mike first came here, they, surveyed the market and they were like, what can we buy? And they were like, there's nothing to buy. And they looked at the inventory and there were only 29 apartment buildings that were over 100 units. And so the landscape, there was like a huge landscape for like opportunity in Boise, but there was no supply.
Yeah, I think something that's interesting is like historically Idaho was a place where single family housing was very affordable. Single family, like for sale ownership. And we've seen that change a lot as, again, for all the reasons that we just discussed, people have moved here. Also, interest rates have moved up. So home ownership nationally is, less attainable than it has been in a very, very long time. But it's even more pronounced in these Mountain West markets like Boise, where there's this really great quality of life, and people who have sort of wealth and equity that they can take from coastal markets and bring it to Idaho are kind of propping up that single family home value. And that's just structurally shifted. And so I think for that reason, homeownership is even more out of reach in Boise and other markets that we invest in the mountain region than it is at the national level. The second thing is like, because there hasn't been historically, a lot of multifamily in a place like Boise, what was built was really just rent by necessity type product, commodity, fourplexes, low amenities, older product. And there has never been like a quality residential offering available. There haven't been kind of class A, fully amenitized, where people, who might even be able to afford a home would say, well, I want to live here because it's just a lock and leave. I don't have to worry about maintenance. I've got great amenities. It's low commitment. And I think we've had a lot of success. Roundhouse has had a lot of success over the last 15 years, kind of introducing that product to this market. But I think it's both a positive and a negative in a way. Like there is a lot more supply here that's also brought in a lot more new entrants, as we'll talk about institutional capital. But at the same time, sort of the investable opportunity set has grown a lot too. If the inventory is doubled, there's just that many more assets that fit the criteria that we're looking for, which is helpful versus this really limited opportunity set that's kind of locked down by all these private owners. And you kind of look at it and you say, yeah, I'd love to invest here, but I actually can't find anything.
Mm-hmm. Yeah, totally. Yeah. What institutional capital have we seen here, like in some of the recent bid processes?
Yeah, I mean, not to keep harping on the same point, but despite all the positive growth trends for really a long term, Boise was not on the radar for institutional capital really until the pandemic. And there's probably a Wall Street Journal every single week about people moving from the coast to mountain markets or more affordable markets with better quality of life. And that's really what put it on the map for institutional capital. And we started seeing entrants show up here in 2020 and 2021, groups like Carlisle and Cortland and a whole swath of kind of smaller mid-tier fund managers and true institutional capital, both in the acquisition and the development side. And those groups want to grow here as much as they can. That said, it's difficult to grow here, as we know, and it takes a lot of boots on the ground knowledge and local relationships and being able to invest across both acquisition and development. And as you kind of noted, it's part of the healthy maturation of the market. Now, it did lead to more supply, especially in 2022, 2023. But it's grown the supply of multifamily properties basically doubled from 20,000 in 2020 to about 40,000 today. But that creates more liquidity in the market and more opportunities to invest. So it's a bit of a double-edged sword, but overall healthy for the market.
I think there's this perception that because Idaho is a business-friendly, low regulatory state, low density overall, that it feels like supply should be able to react very quickly to demand, and it would be subject to oversupply, similar to what you've seen in other Sunbelt markets in Phoenix, Dallas, et cetera. And obviously supply has been a major theme for the U.S. multifamily industry over the last 4 or 5 years. The markets that are suffering the most are those that have been the most oversupplied. The ones that are performing the best are those that have been the most structurally undersupplied. But I think it's worth touching on that dynamic in terms of supply and what we often talk about is supply elasticity. How quickly does supply react to changes in price or demand? In our case, do you feel like this is just a place that it's going to boom bust and just gets oversupplied during periods of growth?
No, obviously. And so I think there's a few things that we could talk about there. I'll hit on a couple of the points. So one, Boise's actually somewhat landlocked more so than people realize. So to the north, you basically have the Boise foothills, which is largely owned by, it's all BLM land, Bureau of Land Management. You have the river that sort of runs through town, sort of obviously is protected. And then to the south and the east, you have actually a volcanic plateau. And so if you were to actually build on that, it would be incredibly expensive to blast through that rock to actually construct anything. And so you sort of have those natural barriers. Now where you have sort of a path of growth is really to the west. And what you're seeing to the west is that there's a NIMBYism, and because of that NIMBYism, actually political and regulatory changes that are purely like anti-multifamily or have put a growth a growth moratorium on multifamily. And so the only place where it could grow, they're saying like, we don't want multifamily and we don't want to grow here. And so that sort of really like boxes you in completely.
Yeah. Yeah, that last point has been really interesting because that's just been over the last really like 2 or 3 years. I'm sure it's a sentiment that's been building for a longer period of time. But there's, of the 8 cities that make up the Treasure Valley, one that I love this city, but one of the city council members has said, as long as I'm in this seat, I will never approve a multifamily project. And yeah, I mean, that creates an entitlement barrier similar to what you see in some coastal markets. The other point I would add to that too is that, you know, these markets, like you take your classic Sunbelt markets that have been oversupplied, when you look at who is building the product, a large percentage of it is from these national merchant builders who build, 20,000 to 100,000 units a year. And they invest in these markets because they're large, there's high demand, they're easy to build in, and it works really well for their merchant build business model where they have to invest locally in the team and the resources and infrastructure and feed the pipeline continuously over a long period of time. And it's much more difficult to do that in a place like Boise. Although it's almost 1 million people, it's just very hard, to your earlier point, to source land sites, to source labor, to have the pipeline to sustain that business model. And for that reason, you don't see these really large national merchant builders present in the market. And so that means that it's local or regional developers, home builders that are really supplying the market. And they have less access to capital. And in some cases, where they do access institutional capital, it's a one-off project or onesie twosie kind of thing. Not like, hey, we've got a pipeline of 15 shovel-ready sites ready to go, and they could just turn on the spigot at any point in time.
Yeah. To add to that, I mean, I think in contrast, as you noted, to Sunbelt markets, other high growth markets, really the cost piece of it here keeps a governor or is a governor on development, whether it's labor, materials. We noted a lot of the big infrastructure projects that are happening here, obviously Micron, the airport, hospital expansion, that sucks up a lot of the labor, and just labor in this region is generally harder to source. And all that just contributes to higher cost to build. And so that's kind of a natural governor on supply. The other natural governor, as we've alluded to, is kind of geographic or physical barriers that are really true in all of our Mountain West markets, but certainly here in Boise. Even though like sometimes people will look around and be like, well, there's land as far as the eye can see, you could build into infinity. There are real structural reasons why that's not true, as you noted, Katie. And so, yeah, it's, while supply has been added, there are just very structural reasons as to why it will never become oversupplied in the same way that a lot of Sunbelt markets can.
If we kind of take it a level deeper and say, all right, what about right now? Like you mentioned that 22, 23, you saw some oversupply. I think as we've seen what, kind of oversupply there was has now been absorbed. And now we're in this period of like real deep structural undersupply. But Katie, like in our operational data, like what are you seeing in terms of like, are you starting to see that like pressure form? And
let's get to the operational piece, but before, so in 2025, 1,500 units were delivered and 2,500 units were absorbed. So basically 1,000 units above what was supplied were absorbed. In 2026, another 1,500 units are being delivered. I suspect that a similar amount will be absorbed this year as well. And so what we're seeing from the data is really we're looking for like leading indicators. So from a leading indicator, if you just look at Q1 and Q2 leads across our portfolio, i.e. people who are like going to the website or like inquiring about, renting an apartment building, our lead volume is up 25% year over year. In conjunction with that, our spend, so like how much advertising dollars we're spending per lease that we obtain, has gone down 7%. And I think that's important because it's saying that like the demand is real. We're not just like buying all of this demand, and that's why our lead volume is up. So that's really important. And now we're seeing that really come to fruition in rent growth. So in Q2, our lease trade outs, which are both new leases as well as renewals, our average across our Boise portfolio was 3.4%. And so you're starting to really see this come to fruition. Our revenue was up 3% year over year in Q2. And so this momentum we've seen building for a while is really, you're starting to see it in the rent growth.
Yeah, there's just like no release valve anymore. To your point, if your net absorption, so demand in excess of supply, is 1,000 units per year for 2 years, I mean, very quickly, anything that was available just goes absorbed. You see occupancies move above historical averages, and rent growth can really kick in, pretty quickly. Yeah, I think what's been interesting too is that, like, when you look at, we have 4,000 units under management across Boise, and everything from LIHTC affordable product, Class A downtown urban product, suburban garden style, more infill garden style. And I think those pockets where you're not competing directly with new supply or with supply that's kind of like, was started a few years ago and is in the tail end of lease up, like that's where you're seeing pressure. And also in the more affordable, not capital A affordable, but just like affordably priced product, where you've got really low rent to income ratios, but you're in a submarket where you can draw from, employment in downtown or Micron in Southeast Boise. And I know in some cases we've seen effective rents move 15 to 20% since fourth quarter, which admittedly there's some seasonality to that number, but that is not a normal market environment. And I think that that's getting missed by a lot of folks in third-party reports and kind of the headlines you're seeing today.
Yeah, it's a combination of, real market rent growth, but also basically the abolition of concessions usage almost across the market. And you're seeing it most notably in properties that finish lease up and they're releasing their first gen leases now, and they're some of those are getting close to 20% effective rent growth, but embedded in that is plus or minus 10% real market rent growth for some of those properties that are in higher demand locations. The other interesting thing is that since we had 2 years of relative oversupply, plus or minus 3,000 units delivered a year, and we did see rent decline in 2023 and basically about flat for 2 years, 2024 and 25, before seeing this current acceleration. At the same time, we saw really tremendous income growth. So we've had over 6% median income growth in the Boise MSA since 2020 on an annualized basis. So you saw rents decline, incomes grow at an above national average level, and you saw that rent to income ratio actually decrease over the last several years, to the point where in our portfolio, I think we're just over 20% rent to income. So although we're now starting to pass on big rent increases in our portfolio, our renters can afford it, and we're not taking an outsized share of their wallets.
Yeah. Two other things that I think are interesting that I looked at recently from a data perspective were that in downtown Boise specifically, 2/3 of the lead volume that we're seeing at our properties are actually coming from out of state. California, Utah, Washington, but really mostly just Western US is the biggest driver. And then we're also under lease up in a downtown property right now. May, I think, got 49 leases in 1 month, and June got about 53. So like huge numbers, like frankly, far more than we would ever underwrite.
Numbers we haven't seen since the pandemic.
Yeah. So I think that's really interesting.
Yeah. So I want to introduce another question. We've talked about, obviously, Boise's been growing. It's really healthy from a demand standpoint. We're seeing it in the data, but that data is also, publicly available in a way that it wasn't historically, especially in Boise. We've also talked about how institutional capital has entered the market. To put this into kind of practice, how do you actually invest in Boise? Are there actionable opportunities, or is everything just so picked over at this point that you actually can't find an attractive entry basis?
We're fortunate that we have a lot of structural advantages. which are intentional. I mean, it's part of our strategy as a company, right? But I mean, first and foremost, the fact that we're based here, we're boots on the ground, the fact that we've been here for 15 years investing in this market, can't be overstated how important those advantages are in terms of uncovering interesting off-market opportunities. A lot of times, we'll have brokers actually calling us before they're going to value a property, because they want our opinion before they present a value to a would-be seller. And so we learn about these opportunities, before they even come to the market broadly. We have relationships with longtime local owners, and despite all of the changes in terms of institutional coverage and ownership in this market, ownership is still dominated by long-term incumbent owners like Roundhouse, and stuff still does trade off market in a lot of cases. And because of our kind of incumbent status and boots on the ground here, we're able to source those opportunities. I think probably the best example of that, or one of the better examples of that, it was a two property purchase called Jasper and Dovetail that we bought in 2021. Jasper was an existing asset. Dovetail was development dirt that we bought right next door to it. And we had been working on this potential acquisition and development for 5 years. It was a kind of an esoteric seller. He's a developer of for-profit medical schools, had some multifamily dirt to the side of this medical school.
He was actually required to build
that's
the
right,
multifamily.
Yeah. And we just stayed close to him in the process and played it out over a really long period. And ultimately, we were able to close on the acquisition of both the existing apartments and the development land in 2021 at a time the market was ripping. We paid $230K a unit for Jasper. Comparable trades at the time were going for $350, $375, $400 a door. So a really steep discount to values at that point. We delivered Dovetail for $260 a door. So also, incredible discount to sale prices or sales comps at the time. And we executed successful cash out refis on both properties a couple of years ago. And they're two of our best performing properties, despite 2021 obviously being a pretty tough vintage.
Yeah. They were in opportunity zones. I can't remember if you said that, but that was an interesting piece of it. And
Yeah.
the other interesting piece of it, which kind of goes to like our entire operating platform and our advantage, was that like this guy was a non-institutional developer, as you mentioned. He put like, I can't remember if they were black or white appliances in all of the units. And so we actually executed on a value add renovation program right out of the gate for brand new property.
We painted it as well.
We painted it,
rebranded it.
We rebranded it. We did the whole 9 yards, but it's like something that was actually brand new. We could still automatically like create and add value through our platform from day one.
I think it's such a great example because, to your point, this was sort of a peak of the market buy, and yet it was a great investment outcome despite all of the headwinds that you've seen in the multifamily sector over the last 4 or 5 years. And to your point, Katie, like that is like the prime, opportunity for Roundhouse is like new product, so you don't have this kind of deferred maintenance capital drag that you get from older vintage product, but just mismanaged. They just missed the mark on finishes, on kind of cosmetic things. They don't know how to market the property. They don't know how to operate the property. We can bird dog, the relationship for years in some cases, buy it at an attractive basis and implement sort of our operational value add business plan. And you can do that in any market environment. It's certainly harder when you're in a very frothy environment like we were in 2021, but today it's not that. Despite the sort of structural increase in institutional interest in our markets, you're still at a cyclical low point in capital markets and general capital availability. So we're not competing with these core plus open-ended vehicles that we were a few years back. And there's no doubt that we will be sometime in the future, but you're kind of in this window right now that is, in my view, a pretty attractive time to be buying.
Yeah, Jasper and Dovetail really hits on all three of our key core competencies, which are investments, development, and property management. I think that's another kind of one of the structural advantages that we have is being able to oscillate back and forth between acquisitions and ground up development as the market as market opportunities evolve and conditions change, which is probably a good segue to talk about a development opportunity we're really excited about in Victory.
Yeah, developments are one of my favorite pieces of the business, but maybe it's because sort of where I came from. And I think our team just does an incredibly exceptional job at our development projects, but Victory is pretty exciting.
Yeah, I guess I could introduce the project. So Victory Road is a 300-unit development project. We sourced the land from a multi-generational Idaho family that originally homesteaded the land in the late 19th century, I believe, and came to us through a local relationship with an attorney who was representing the family. They were looking for an exit, and he thought we'd be a great buyer. And so we evaluated the project. And what I think we really love about it is that one, it's a large site, so it supports a low density typology, which, as you know, Katie, given your engineering and development background, is a much lower cost structure than a mid-rise or high-rise typology, which is usually required when you're in sort of an infill location. Which brings me to the next point, is that it's an infill location. This is probably one of the only sites, if not the only site, where you can build a low-density multifamily project, but you're still 8 minutes from downtown Boise and Boise State. You're less than 10 minutes from Micron's headquarters and their $50 billion expansion. You have really great freeway access. You're 5 minutes from the airport. So unique in that it's in this established sort of high home value, great residential community, proximate to all this employment, but you're actually able to build a garden style product. And
yeah, it's an 18-acre site. So, I mean, it's not small.
Yeah, and again, like as we were talking about, this opportunity in these markets to deliver this elevated sort of luxury and yet still attainable housing product in a market like Boise. I think we've had a really great track record of delivering on that thesis. And Bozeman, Missoula, Montana, Idaho Falls, Boise, as you mentioned, dovetail. And so it's just like right down the fairway for what we do and what I think we do well.
Yeah. I mean, you said it was infill, but like how infill it is pretty incredible. I mean, it's very like positioned so well and triangulated between all of these huge projects that we were just talking about. 15 minutes is probably the longest drive that you would have to make to get to Micron, perhaps.
Yeah, we're solving for a really attractive return profile there too. It's all this kind of leads to the attractive investment opportunity we think it is, and we're getting to a 6.5 untrended return on cost, which is probably 150 to 175 basis point spread relative to spot cap rates to buy an asset of similar quality today, which we're really not seeing in any other markets that we cover, and so that's probably where we're seeing the most opportunity right now in Boise.
So when is groundbreaking?
Groundbreaking is set for September, so coming up soon.
It's very exciting.
Yeah.
Well, thank you all for sharing your perspective. I really enjoyed this conversation and look forward to seeing where Boise goes over the next couple of years.
Likewise.
Thanks.